pre-market open. Now again, that's under live trading conditions midweek. We can actually review all this stuff in real time and look to get into live positions. Now going into the dollar-yen pair, again, very volatile. Now there's a couple of things I'm going to point out with the dollar-yen is it primarily has a very high correlation to the euro-Swiss franc. Now what I'm going to do here is I'm going to actually pull this up so everybody can see this. I'm going to put the, I'm going to take some of these indicators off. Now before I do that, actually, I just want to simply point out to everybody right here that the predicted true strength indicator from Vantage Point is, again, we're sitting extremely oversold here. It's more or less running flat. Predicted MACD is crossed over to the downside, as is the predicted true strength indicator. So what I'm going to do is I'll save the correlation to the end of the presentation, but what I want to point out is finding a likely target. So I'm going to back this out to about 9 months, and you can see how I've drawn a line here, and we've got this one line at about the 84.70 area. So what this tells me is that, you know, we had some very significant support sitting at the 87 level, and that actually gave way. But it gave way on a Friday under US dollar, mixed US dollar strength and weakness, and it was able to break through that 87 level. But, you know, so if it breaks through that level, where is the next potential target? Well, if we go back here, you know, to 2009, you know, the end of 2009, we can see that for a very, very brief moment, the US-Japan currency pair hit this 84.70, 84.50 level, but then subsequently shot all the way back up to the 94. So obviously, I'm not very comfortable with shorts on US-Japan at all. I would rather build longs down to this 84.70 area and then have my stop sitting at about 83.90. That's how I would prefer to play this, and I would be using very small positions over a broader area of this range. But again, the US-Japan currency pair has a very high correlation to the euro-Swiss franc and to the franc in general. And again, if the euro-Swiss franc is starting to move higher, then chances are a couple of days later the US-Japan is going to follow. So to begin the week, I would recommend standing aside on this pair or buying small positions on dips down towards this 85 level, and we'll have to just see how this plays out. Now, going into our next currency pair, we're going to be looking at the US CAD. Now, the US CAD, I'm going to spend a little more time on this one too, so everybody understands what's happening here. You can see that I've drawn a couple of lines using the Vantage Point software to identify what's been happening for essentially the last month. We've got heavy resistance in this 106.70 area, with what you can see is this line I've drawn. But however, now what's interesting is we have very significant support building in the 102.80 area. So essentially the market is trapped in this area here, but the market's going to likely get very bullish on the US-Canada pair to a certain area, and then the sellers are going to move back in. So what we want to do is we want to try and follow smart money here. Smart money shows US-Canada to be in a very bearish cycle here. Now I'm going to back this out so everybody can see what's actually been happening, but for now this is the current range we're dealing with, and my opinion is we're going to have sellers moving back in on the US-Canada. As soon as it gets towards that 107 area, the sellers are going to essentially just come out of the woodwork, and they're going to be looking to get back in here. So backing this out to a 6-month time frame, we can see how I've drawn these other lines. I have the line here at the 106.70 area. However, the former range was sitting up here in this 107.50. We have this one brief candlestick that's shot up to the 108.50 area, and people will say, oh well, it was almost a false break. But we can now, what we can do is we can see the other line that I've drawn down here sitting at the true range, which is at the 99.35 area. So for now what we can do is identify 99.35, and we can identify 108.50. So when is the last time did this thing hit 108.50? Because we can see the reason I didn't draw the line right across and I left it as a very small line is to identify that this range that we were playing in this, you know, this 107.50 to 99.35, just last week it actually was lower. It's 106.70. There was all kinds of sellers moving in at that level. So that we can see how this line is slightly lower than this line. Now, let's take it one step further, because I've drawn the line. 108.50 is the highest point we've had in US Canada. Let's go back a little bit further and have a look at a 9-month outlook. Well, now the picture changes again, doesn't it? Now all of a sudden we have 2 points sitting at the 108.50 level, and then we can see these smaller ranges in between. So what I'm seeing here now is that this little range we're playing in US Canada between 106.70 and 102.80 is still very bearish. That's the reality. So only a sustained break of this 108.50 level will see this thing reverse. So this is what I want to point out to everybody, and this is why you've often heard me talk, is never enter into a short-term position or trade off of short-term indicators without looking at the medium and long-term outlook, because most short-term traders would completely miss this. So, we need to identify everything that's happening inside the range using the Vantage Point software, using these range identifications, and to get a better idea what's actually happening in the market. So that's a very interesting analysis on US Canada, in my opinion. And to begin the week, obviously I'm suggesting setting shorts between anywhere when it gets near this 107 level is a very good opportunity to set shorts, with all stops above, in my opinion, should be about at the 190 area. So that's a very good, very detailed look at the US-Canada pair. Now looking at the British pound, same thing, guys. I've drawn some lines here so everybody can see this. We've been in a very, very powerful uptrend on the on the British pound US dollar. You'll remember the recommendations that I repeatedly made off this level. I'm going to draw a profit calculator up here, which I often like to do. I can hit this line that I've drawn almost identical right up to it. Then what I'm going to do is just hit the profit calculator here. Excuse me, just give me a second. Profit calculator. This trade we've been into for a considerable amount of time. Since the beginning of June, it's in the live pre-market open. We've got 1,110 pips booked. If you're taking a single trade and you traded nothing else other than the British pound, buying off the 143 to 144.80, fantastic trade. So what we want to do now is identify what's happening with this range. We've got this 142 level as our top. However, my concern is this 155.30 area. Now what I'm going to do is I'm going to pull this out so everybody can see this. We want to make sure we're looking at not just the short term but the long term, so we can see that we've had a failure at the 155 level, just under the 155 level on Friday. We've got this line here dating back to essentially the beginning of April, so we're somewhat playing a range here on Great Britain US also, in the from 155 to 142 area. So we want to be a little cautious with longs here. So what I would recommend to begin the week, we identify the 18-day predicted moving average is sitting at 151.13, 152.26, and 153.14 with a close of 153.07. My opinion is we could potentially move back towards, I'm thinking around the 152, between 152.26, and I don't think we're going to get all the way down to 151.13, but anything is possible. But essentially, we've closed at 153.07. We're going to be looking